It's Sunday the 21st of July. I'm going to give you a technical analysis breakdown of some UK and US stocks in this video. Let's get straight into it. Hi guys, it's Enny, aka the Noctrader, your friendly neighborhood swing trader, back again with another video. Remember to hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. I've got Facebook, Twitter, and Instagram at the Noctrader on all social media platforms. And if you check the description section below, you'll see a link to my mailing list. If you join my mailing list, you get priority access to all my latest videos and straight into your inbox, and you also get priority access to my free training course I'm creating for beginner traders. And if you join my Discord group called Pip Talk with Infinite Investors, it's a trading chat room for traders and investors to talk about anything and everything to do with trading and investing. So let's get straight into it. I've got 3 UK, 3 US stocks to cover today on my watch list, and the first one I'm covering is Anglo American. This one is one I've been covering for some time, and it looks like it's rebounding off the middle support and resistance. So it's an ascending channel pattern. As you can see here, this middle support and resistance line, the dotted one, has been it's been used as a support and resistance. So when price started selling off after hitting the resistance line of the ascending channel pattern, it kind of plateaued here, and then it looks like it's started climbing again. I can see it climbing all the way back to the resistance line, and it's been doing that so far. I can see it going up in the next couple of days and just making itself back to this resistance line and potentially breaking through it. The 180-day simple moving average is curving upwards, which is a bullish sign as per usual. And yeah, so I can see it. The great time to have entered this trade would have been when it was at the support line here, and I did call it out as a long position there. But there's still potentially some profits to be made, as you can make about 90 pips. The only reason why I wouldn't enter this right now is because I think there's other opportunities to make more profit and with a tighter stop loss, because the top stop loss would have to be quite big, given that the support line is about 123 pips. And you know what I say about risk to reward ratios. I want to get a risk to reward ratio that's really favorable, not less than 1. So if you want to set a tight stop loss, that could be favorable as well. But I'd say, but I do still think it's going to go up. So this would be a long trade for me. Next one is Vodafone. So Vodafone is one that I'm actually in position in right now. If you see my videos from last week, I was actually going to go short on Tesla and long on Vodafone, and then I decided to take out my position in Tesla and put it all in Vodafone because I was more confident about that position. And here's why. On the daily chart, you can see that there's been a resistance line that's been hit several times, 1, 2, 3 times, and each time it's been hit, it's sold off. But this time, when they hit it, it kind of broke out of it. So that means that there's been a change of pattern. 180 simple moving average was descending, but it's starting to flatten out. So this also kind of alludes to a change in pattern. It was selling off for it's been selling off since about February 2018, so almost over a year it's been selling off. It looks like it's had enough, and it's kind of found a base, and it looks like it's starting to climb now. If I zoom into the 4-hour chart, as you can see here, it's kind of created an ascending channel pattern. If you look at, last week I called out this position when it was actually here at 125, and it's already started climbing. So I feel like I was vindicated in my thought process of going long. This point was a pivotal point here because it showed where price intersected at the previous resistance and also the new support for the ascending channel pattern. So this was a pivotal point, and I only thought that it was going to break out to the upside just based off of all the information provided. The MACD and RSI also showed that they were changing direction, so there was a lot of confluence here. There was lots of different indicators all telling me the same thing, that I should go long, and I was quite happy to take a long position on this because of where the price was at. You can set a pretty tight stop loss, and currently the position I'm in, I think I'm up about £30 or something like that, and right now the stop loss is about £60 stop loss, so minus £60. So right now the risk to reward is pretty favorable, because if I get all the way to the top, that's a potential £200 I can make. So £200 to risk £60, just about 3.5 to 1 ratio, which is risk to reward ratio, which is pretty good, and I'm happy with that. So I'll just see how this plays out. I can see this taking a couple of days. I will not be scared if I have to be worried that there could be a correction, a retracement, because look at here. If you look here, price went up and then it sold off quite a bit and then carried on going up. So I need to learn to make sure that I hold my nerve, and if it sells off, I just hold my position, knowing that, and as I think it will still rally all the way to the resistance line. So yeah, Vodafone, I'm currently in that position right now. Next one on my list is NMC. This is one I've had on my watch list for some time, but I never really took action with this one. Let me show you. So NMC on the daily chart. Oh wait. On the daily, what am I doing? Alright, so on the daily chart, it's been a descending channel pattern. It triple topped here before selling off some more, and now I think it's found the base as well, because it's it hasn't triple bottom, but it's found the base here. It's bottomed out twice, and 180-day simple moving average looks like it's about to flatten out. I wouldn't be surprised if price breaks out of this descending channel pattern resistance line and starts climbing up, similar to what was it, Vodafone, the same way that did. Now this line here, it gets real interesting here, because this line has significance even on the weekly chart. If you look at the weekly chart, this is like a base that's had been a support line before. It's been broken before, but if you date it back to 2016, it's been a relevant support line, and it's finding relevance again here. The ones MACD and RSI doesn't really give us much information on the weekly chart, but on the daily chart, it looks like it's kind of losing momentum on the negative side. If you see this here, you can see that the it's not a perfect line, but if you see that the MACD negative side is kind of lost momentum, so this kind of tells me that it could start becoming bullish as it starts creeping upwards. And if you zoom in further, look at maybe the 1 hour chart, you'll see that this looks like a double bottom to me. It looks like it's kind of found the support, tried to hit it again, and then so now I wouldn't be surprised if it kind of climbs and breaks out here. This would be a good long position to take, as you could set a stop loss just under this line and be pretty comfortable in the fact that if it breaks out to the downside, you wouldn't lose too much, but there's a lot of upside to be taken from this trade. So yeah, this is one to watch, and one that's a potential long as well. Now for my US stocks. Okay, so the US stocks. First one I'm looking at is CXO. This is the one that I've been following for some time as well. If you follow my technical analysis reports, you know that I've returned to this a few times, but I've just been waiting for the right circumstances before potentially taking a long. But it looks like this is kind of, each time I thought it was going to break out, but I think this is the time when it's going to break out now. Kind of similar pattern to this last two that I just spoke about. Descending channel pattern, found a support line and hasn't been able to break out of this support line. For this one, it's 9779. If you look on a weekly chart, this line is tried for almost since about December 2018 to break out of this support line just at 2779, and it has had no kind of, did a false breakout, but it hasn't really had any luck breaking out of it. The MACD and RSI look like it's flattened out, and it looks like it's going to start climbing again to me. On the daily chart, once again, it's found the support here, and it's made a kind of aggressive upswing to the resistance line. I believe now will be the time for it to break out. I believe this next week it's gonna break out. So watch out for like a sharp breakout, climb for a bit, and then it may come back down, consolidate against this line before climbing some more. But as of like the next week or so, I think that there's some money to be made from a breakout. The only thing I'd say is that if you take a long position on this, you want to set a stop loss just below this resistance line, so that you can protect yourself for a potential drawback if it decides that it doesn't want to break out and it wants to still ricochet off this support line one more time. But I do think it's due, because it's been trying several times and it's getting closer and closer to the intersection point where it has nowhere to go. So I do think it's going to break out this time. If not, it will probably ricochet off this line again and then one more time, then break out. But a breakout is due. If not now, then next go around. Next one is ADNT. So this was one that I was in a position with a while back. Not a while back. It was probably like, when was this? Maybe 2 weeks ago. And I think I timed it pretty well. I entered, went long, hit the $25 mark, and I thought it was just gonna kind of retrace and then come back for some more, but it sold off. So as it was selling off, I took my profits, made a small profit. I was up at £200 and I went down to like 100 and something because I lost quite a bit when it sold off here, but I was still up, so I was happy with that. And I thought, I still believe this is a long position, but I just didn't know how long this was going to sell off for, and there's an opportunity cost that arises with holding a position that is not making you money or maybe losing you money in this time period, because other money could be made somewhere else. So I exited my position, and I'm happy I did that because it spent over the time that I had exited, it spent maybe 12-15 days just selling off. That's time that I made money elsewhere. So I made the right decision, but now I think it's plateaued. Look, so it's the initial reason why I entered this is ascending channel pattern, 188 simple moving average has come underneath price, so price looks bullish, even though it hit this $25 mark and it was acting as resistance. I knew that I was going to come back to retest eventually. I think now's the time to potentially enter ADNT, because 188 simple moving average is underneath price on the daily chart. Even though price is sold off, it's kind of flattened out now, and I think it's going to have another shot at breaking the $25, and I think it's going to be successful this time. MACD kind of flattened out. This is what you're going to see. It's lost momentum, it's flattened out, ready for upturn. And RSI doing the exact same thing. I think this would be a great position to enter for a long position, because you could potentially enter a long position here and then set your stop loss. Maybe let's say you set it 200 pips below your long position. Even if it just goes back to the $25 mark, that's 223 pips. So that's a 1-to-1 ratio. But in reality, your risk reward isn't 1-to-1, because you're not trying to aim for $25. You're trying to aim for the resistance line. I still hold true that I think price is going to make its way all the way up to this resistance line. So that's potentially 1,000 pips. I may have to move this target profit line to about here, so to reflect the movement. So this is potentially 200 pip risk to 1,000 pip reward. So that's 5-to-1 risk reward ratio, which is really enticing. So I'd say this would be a great long position as well. Now, last but not least, actually before I go to the last one, check out my video. Well, it's not my video, it's on Trader Nick's channel. Check out Trader Nick's channel. Great forex trader from the US that I've been in contact with for some time. He interviewed me for his podcast, and we talked all things. Even though it's a forex podcast, we talked about lots of different things. We talked about trading psychology. We talked about the YouTube journey. We talked about cultivating our audience, trading strategy, swing trading. It was a short podcast, like 40 minutes, but it's on this channel, and he interviewed me, and it just be great to check out. To be honest, I talk a little bit more about just trading in general and my journey and stuff like that. So and I kind of talk about my audience, my Noctrader audience. Yeah, so I'll put a link in the description section below, and I'll also put a link up in the top right hand corner if you want to check out that podcast on this channel. But anyway, the last one is Dust. So this one, I'm not gonna lie, I didn't find this one. My good friend Wallace, I don't know why he spells it. It's like Walrus, but it's Wallace. Check out his Twitter page. Actually, he's a great technical analyst. I'm gonna try to get him on my channel. He pointed this out. Now, the first thing you guys will probably identify is that this this line is not very perfect. Like, as you can see, it cuts through. It has a couple bits where it intersects, but it cuts through. So I'm gonna do a little trick here. So it cuts through here. It doesn't really intersect here. Cuts through here. I'm going to do a little trick for you guys. This is the linear scale. I'm going to go to a log scale. And voila. Once you go to a log scale, it all runs true. So the reason why we use a log scale, I'm not going to pretend I knew this before. I learned this literally about 20 minutes before I made this video, and now I'm going to pretend I know it and teach it to you guys. The reason we use a log scale is because Dust is a decaying ETF, so that means it decays over time. And to account for this, a log scale can smoothen out the decay so that it's been factored into the chart. it's hard to explain if you don't really understand log or algorithm, but it's kind of like, I think it's GCSE level maths. I get it. I get it conceptually because I understand logarithm. If you don't, just take it. Just understand that if you use log, it will take into account the fact that the ETF decays over time. Maybe I'll make another video on it because I probably didn't do it justice with that explanation. But either way, you use that and it kind of makes the chart make sense. So as you can see, every time it's hit this line, it has hit this support line. It's kind of climbed. So first time climbed 1,300, 12,000 pips, 1,200 pips in 15 days. Second, like 800 pips in 16 days. Third time, 600 pips in 14 days. So I'm going to be quite reserved on this, and I'm going to say that it's probably going to climb about at least up to this kind of dotted support line, resistance line. So even if it's just to that, it probably could potentially make its way all the way up to this line. But even if I just go up to here, that's 200 pips. And with 200 pips, you only need to risk a very small amount, because I've set the stop loss like really just below this line. Because if it breaks out of it, then I'll take my loss. So I could potentially put like 30 pips. So that's 200 pips to 30 pips. That's like nearly 7-to-1 risk to reward ratio, which is really good. So I'd say this would be good for a little long position for a couple of days and see how far it goes up, and just keep raising your stop loss as it climbs. But you remember, dust is an ETF, so they are quite erratic ETFs. So you have to just take that into consideration when you're trading these. But this looks like a good speculative position that can get you quite a lot of return. So I might potentially enter this with a small amount just to see what happens. But yeah, that's me, aka the Noctrader, signing out.